So did we see a game changer, a new Federal Reserve, a new Jerome Powell this past meeting? We all thought that the head of the Federal Reserve, Jerome Powell, would speak hawkishly again, or at least say the things like, if we're data dependent, which he did say, but they're ready to hike rates again should there be a need to do so. Instead, he actually took the other route, which was he thinks, or the Federal Reserve in general believe, that interest rates are high enough to be sufficiently restrictive, meaning we're not going to see big gains in the economy in the US. And the Bank of Canada recently said the same thing, that interest rates are high enough to slow down the rise of inflation and get inflation back to the 2% mandate that both Bank of Canada and Federal Reserve have. So is this a game changer? Well, I think it is, because the Federal Reserve actually went as far as showing us what a lot of the Fed governors were saying in the last meeting. They actually have this thing called the data points, or a graph where they show their points where they think interest rates will be in the coming year. And many of the Federal Reserve governors actually had plots or data points that had, or that showed interest rates being lower, that we may see maybe as much as 3 interest rate declines over the next year in 2024. Again, something we have not spoken about or heard the Fed talk about as yet. Now, I know the market is expecting maybe as much as 5 interest rate declines next year. So the Federal Reserve and the market, once again, are a bit different, a bit off, not exactly matching up. And we'll see who ends up being right. But overall, in my opinion, when you're talking now about interest rate decreases coming, and it's just a matter of time before we see them, that is a huge win for the stock market. As we know, the stock market dislikes hiking interest rates, but when we talk about lowering interest rates, that is what the stock market wants to hear. And certain interest rate sensitive parts of the stock market, like technology, like utilities, like real estate trusts, and many other parts of the market, that's what they want to hear so that they can move ahead once again. And keep in mind, the stock market is always thinking 6 to 12 months in advance. So if we're starting to hear about interest rate cuts, perhaps 6 months from now, the market's going to start pricing that in. And that's probably one of the main reasons why we've seen the stock market move higher here in North America already in the last 8 weeks or so. So we have a few charts here that show the first one, the Fed funds rate increase. And again, we can see how much it increased in 2022, but you can see on the far right-hand side, the last 3 meetings for the Fed, or the last 4 out of 5 meetings, there were no interest rate increases. And I guess pretty soon, maybe the chart of 2024 will look totally different. We'll actually start to see it going the other way, that there'll be minuses besides some of these. We'll start to see some interest rate decreases in the not so distant future. One of the main things I wanted to show is the idea of treasuries, 10-year treasury bonds, the 10-year bond rates, government bond rates in the US and Canada. And you could clearly see how they've come down. Now the 10-year is at under 4%. This shows a 3.91. It's actually, I think, earlier today in that 380 range. It's been jumping back and forth, between 3.85 and 4%. Once upon a time, this rate was as high as 5%. And again, when these rates continue to fall or start to come down as they have been, this is a good thing for stock market performance and a good thing for individual stocks. I also have here the 10-year bond rate in Canada. And you can see that it is significantly lower than the 10-year bond rate in the United States, under 320. And again, this was much higher just maybe 8 weeks ago. So you can see really how things have tailed off because of some of the commentary by the Fed. And really, is this a green light now for stocks? Well, I guess by the market's reaction over the past 8 weeks and how high it's gone in such a short period of time, I think the market is telling you, yes, this is a green light to be in the stock market, to put more money to work. And I've been doing that with my clients and my investors over the last little while, trying to continue to buy those things that are on the cheap, good quality names, because those are the names that seem to be moving the quickest. And if you don't get in at these lower prices. And unfortunately, if you're hesitating because you're just not sure where things are going, you're going to miss out on some really good quality opportunities. And as I've said earlier in the show, you really can't time markets. So when good quality opportunities come about, rather than trying to time it perhaps to get in at a slightly lower price, if it's good quality, buy the investment, and over time it should rise. So overall, I think the Fed did, or there was a game-changing kind of event at the last press conference for the Federal Reserve. I think now they're starting to speak about more dovish ideas, trying to speak about more when interest rates will decrease rather than increase. And this is only and can be only positive for the stock market.